Years ago, I opened up my mind to thinking and looking at the markets in a different way. I challenge you to watch this entire video and see if this doesn't open up any doors for you as well. I prefer, it's funny because I wasn't like this at first, I prefer, quote unquote, the falling knife, right? You'll hear it all the time, guys. Don't try to catch the falling knife. Oh, I'd love to try and catch it. I like living dangerous. You give me some fallen knives, I'll stick my hands right out there. I love them. Everyone else is afraid of them. I love them. But that's another thing going on the conversation we had to start today. I used to get clowned all the time on the internet because like there'd be like a Gartley pattern and I'd have like aggressive orders set and it'd be like a big like red candle going towards it. And I'd be like, hey guys, waiting on a bullish Gartley. And everyone would be like, oh my gosh, that red candle's so big. You can't catch the falling knife. Why would you ever have orders there? You're an idiot. And I'd be like, well, you know, the rule says the 127 extension, so like that's where it's at. Like it doesn't say anything about how price. Yeah, but that's a 200 pip candle coming right down into it. And of course, I would psych myself out of trades, being like, oh yeah, you know, that is a high momentum move. Maybe I shouldn't stand in front of this train. But you got to believe in your levels, right? You got to believe in your levels. You got to trust your levels and trust that, hey, my order is at a place where I believe the market's going to reverse. And then, you know, I didn't at that point, I didn't know anything about kind of like how other traders thought. I didn't understand about profit taking. I didn't even understand the concept that bulls can become bears while still being bullish. Now that I understand that, it makes more sense. Like I'm very comfortable catching the falling knife. Because instead of looking at this in fear, right? Instead of looking at this in fear and saying, oh my gosh, like there's a bunch of momentum coming down, I'm going to get stopped out. I look at this and say, okay, if I were a seller here, I'd probably be interested in taking some targets down here, right? Like more traders aren't like, think about it like this. This is the funny thing, right? And this will kind of maybe change your perspective. How confident was that? This will kind of maybe change your perspective on falling knives, right? We look at the falling knives as being this thing that picks up steam, right? This knife is falling, gravity takes it, it catches more and more momentum, right? Would you guys agree that is like the initial conversation about the falling knife? It catches more and more momentum as it goes down. But does it actually? So we think about this, right? If you are a seller in the market, right? Are you more interested in selling when price, like the higher price goes, the cheaper the sell is for you, right? So the more, if you're interested in selling, the higher price goes, this is a cheaper sell. Does that make sense? I know it's kind of weird because it's buying and selling and higher price, cheaper sell, but hopefully you guys get it, right? So as we're falling down, as we're going down and down and down and down, the price for selling is essentially getting more expensive. You guys with me? Because if your targets are down here, right, this becomes a worse and worse sell the closer it gets to your target because it's more risk, less opportunity, right? So are there more or less sellers interested as price spikes down the structure? Again, now if we're in the middle of no man land, that's a different story. But as price gets closer to the next relevant level of structure, are there more or less sellers interested, right? There's less. Because less sellers are interested because the price is more expensive. It's closer to their targets. And then what's happening to sellers that sold up here? Are they reloading their positions? No, right? They're starting to bail. They're starting to say, okay, I made all this money selling from up there. Where's that next structure level so I can get out? So the falling knife is actually a positive for buyers because you're going to reach an exhaustion point at some point. Now, as a trader, it's up to you to predict where that exhaustion point is. And that's where analysis comes in handy, right? You can't just pick a random location. You got to be able to tell where that exhaustion point is going to come. But I like it because I see this falling knife. I see, okay, all the sellers that are interested in selling have already sold. The tide is going to shift because, one, there are no more sellers interested. Two, previous sellers are going to become buyers. Three, there are some buyers looking at, hey, this is now cheaper for me to buy. Buying pressure is now going to outweigh selling pressure. That's what makes the market move up. It may not move up forever, but it moves up. So I like the falling knife. I might dare say I love it. And this was kind of the second phase of my trading, Alex, where I first started off, and I think most traders like this, I first started off just let me know how to buy and sell. And then after I became more consistent in trading, the stuff that was working, I started asking myself why it was working. And I went on like this deep journey, as you can tell I do, as I get sucked into internet videos about Earth and space and quantum physics and all types of weird stuff. And I started asking myself, like, well, why is what I'm doing working? Like, what are the reasons behind this stuff? And I started deep diving in that, and I found it to be very interesting. Just because I'm a nerd of the market, regardless. So I wanted to think beyond just red and green candles. I wanted to think beyond, like, why? What does this candle mean? Why is it happening? Like, what are the actions? Because we know that what we see on the chart is just a visual representation of the participants of the market. So what we're seeing, in a sense, is me and you on this chart, right? Now, obviously, as retail traders, we don't move the market at all, but as a grouping, we do. So I started thinking from this, like, this is crowd psychology. This is people. This is decision making. What does this mean? Why are we making these decisions? And for me, that gave me a better understanding, and it helped with trading psychology, because now I can justify what I'm doing, right? Instead of just saying, like, hey, I'm buying this because of a pin bar. And someone being like, well, what does that pin bar mean? Well, I don't know. But when I see a pin bar, it does the thing. But how is a pin bar relevant? Why did that become your entry signal? Because it's a pin bar. It does the thing, right? But it's one of those deals where it's like, well, here's why it does it. And once you know why, it's like, oh, that makes more sense. Then you believe in it more. So what I found in my trading is that once I went kind of on that route, I started trusting myself more, because I was truly bought into what I was doing. It's not necessary, but I do think the more you understand, it opens up kind of more creativity in the market. And if you want to be successful, you need to be creative in the financial markets, in my opinion. Because creativity typically means you're thinking a little bit different. And I'll tell you what, typically, if you do the exact opposite of what most traders are doing, you're going to have success. And you think about this, again, explaining it, thinking about this from a technical perspective, right? Would you say that most retail traders do most retail traders enter the market before, during, or at the very end of a move? Very end of the move, right? So let's say the market is doing this, right? The market's going down, 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 down. We have this accumulation phase, right? This is where your institutional money is preparing for the next big move, right? We don't know what's happening until after it happens, but this is where it happens, right? Then the market does this little thing where it spikes up, right? Usually it gives you a little bit of a retest, and then it makes this big move up, right? So institutional traders are typically involved in this area. This is where they're accumulating their position to get long. And then they eventually break out, right? Put this down a little bit. Hopefully, smart retail traders, right? Smart retail traders, we get in here, right? Does that make sense? We're probably never going to catch the main move because we don't know what happens until after it happens. But if we can identify the move as quickly as possible, get involved in like the first retest, this is a good place to get involved, right? This is up here. This goes same like Elliott wave theory. For you guys that are familiar with Elliott waves, like the second wave is the biggest wave. Now, where do you think most retail traders get in at? I love this session. This is good. I don't know if someone asked this question or if I just went off on another rant, because that's what I've been doing all day. But I love this stuff. So most retail traders are going to enter here, right? Because at the very end of the move, this is when all your news outlets and Yahoo is printing articles that say, Euro Yen is the strongest. Euro is the strongest. Yen is the weakest. Bullish Euro Yen, right? They don't print it until after it happens, right? Because why would you say Euro Yen is strong down here, right? News isn't news until after it's happened, right? Like no one reports on something before it happens, it's only after it happens, right? So this is where you get your retail traders that have no idea what they're doing. And no offense for them, they just don't know. This is where they all start flushing into the market, right? because they read about it, they hear about it. Now it's popular. All the websites are saying gotta buy, gotta buy, gotta buy, right? All the hindsight traders, like the guy we spoke about earlier, now they're saying gotta buy, gotta buy, gotta buy. So you see this massive increase in net longs for euro yen. Now at the same time, right, you get these net longs, and then like price starts to, I got too many lines here. Price starts to do what's called a distribution phase, right? Another period of consolidation. And this is the interesting part, right? And again, it all depends on where this is at relative to structure. But you get these spike backs, and then the smarter, not smart, but the smarter retail traders, right? The ones that just aren't like clicking their triggers right away, right? They're seeing these little pullbacks and they're like, okay, yeah, right? This is a nice little pullback. I'm getting in at a cheaper price, right? So you get all these longs entering the market. And then you see something like this, right? You see euro yen. I chose the wrong pair, but euro yen, you see a lot of net longs because all those retail traders are rushing in. Now we know, what are those net longs providing for your institutional traders who got involved down here at the bottom? That's providing the liquidity to get out because they got a big, massive buy position. They just can't sell it. They're not like us. They're not like retail traders. They just can't buy and sell whenever they want because they're going to push the market against themselves, right? If they sell, they're going to gap themselves and get out for less money. So they need buyers in there to absorb those sells. And guess what? At the top of the move, you got a lot of retail buyers. And then they can slowly, right, sell a little bit, push it up to make it to intrigue more buyers and sell a little bit, then push it up to intrigue more buyers, then sell a little bit until they finally get out of their position. And then you see this happen. The market goes short while your net retail traders are long. Right? Crazy. And then the process repeats, right? Now the people that were long, that realize the market's gone against them, they're in the red, right? They experience some pain. How do you get out of that pain? Well, now you sell. All those selling orders, plus probably new sellers that are actually interested in this level, help push the market back down. And then at some point, you make a decision like whether we're going to continue down or whether we're going to go back up for a next retracement, whatever the market wants to do at that point. We don't know. But it's interesting because that now does that give you a better understanding of why you can see net longs 68%, but a bearish signal